Welcome to Market Movers, where we identify market-moving headlines and discuss ways to either hedge risk or create exposure in affected assets. We have Scott and Mark.
Hi, Jim.
Scott, another big week. What's the biggest headline that you see? The economic reopening, the unemployment number come Friday, dollar breaking down below 9,800. What do you got?
I like the economic refiring. I think the market has a lot of hope in a lot of the numbers that are coming out these days, Jim. And not that these numbers are good, but the fact that the trends within them are improving. So if you look across the board, as you mentioned with payroll, if you look at consumer spending, even if you look at some of the latest GDP projections, which is stuff that we've actually projected out at Kingsview here on my end, some of these numbers are really not great still, but the trends within them are really starting to improve.
Okay, equities are obviously unbelievably buoyant. So are they pricing in better times, or are they pricing in monetary and fiscal stimulus and address the rotation that's going on today again, which is buying S&Ps, but not so much NASDAQ?
Oh, Jim, you're getting really good at this. It's all of those things. In fact, you've named them all and probably a couple more. But the two that you mentioned that I really liked is the fact that we do have more stimulus. The government has already come out and said they will continue to stimulate. The Fed has already come out and said they will continue to buy. And then you do have the fact that the market is a forward-looking indicator, especially now, especially given the trend reversal maybe that we're talking about with some of the data points that we look at on my end. And therefore, the market has a reason, in my opinion, to be in a lot better mood than it has been recently.
Okay, CME offers the 4 mini contracts, which is in S&P, NASDAQ, Dow, and Russell. Also micros in those. Also liquid options that are Mondays, Wednesdays, Friday, weeklies, and monthlies. So within those, sometimes it's interesting way to be able to express your sector rotation thesis. Let's talk about yields real quick. We're seeing the curve steepening a little bit. Long-term rates starting to edge up a little bit, which surprises me considering all that's going on. Do you think that this is a market positioning thing, or is it inflation? What is it?
Well, it's definitely not inflation, because I don't see any of that anywhere, no matter where you look. Something actually we kind of talked about on Market Movers a week or two ago, which was the fact that as the economy starts to refire and there is that anticipation of more growth ahead, it's likely, or it's a typical scenario where the curve will steepen. There is a lot of debt issuance out there, but the fact that longer term debt, let's say, becomes less and less attractive because of the fact that you just have those rising rate environments going on, that's to me a signification of the fact that the economy and the economic data is likely to improve going forward.
Interesting side note too. And CME, we've seen a lot of trading move further out the yield curve to the 10 years because I think a lot of sophisticated traders think that rates on the short end are locked. So the 10 years become somewhat in vogue. Extremely liquid product that offers weekly options, monthly options, quarterly options. Now to Friday, we have the unemployment number. The estimates show a nasty, nasty number. Does it matter?
No, it doesn't matter because the numbers are getting less and less nasty. In my opinion, the numbers are likely going to stay relatively poor for the next, say, few months on the jobs front. But we're not seeing such bad numbers as we saw for March and April. And so therefore, the markets are likely to take any improvements in the trend as a positive sign.
No, I agree with you too. I know that we know exactly where we're coming from. Last thing I'll ask you real quick is dollar breaks down below 9,800. Does that have any significant ramifications?
Not really, other than the fact that the dollar has been a bit of a safety trade. It does seem to be going part and parcel with a better equity market, Jim. Gold as well, breaking down a little bit here, but I do believe those trends will likely reverse as maybe some more volatility kicks in.
I agree completely too. Thank you for joining us on Market Movers, where we are helping to make you a better trader.